You know, one of the biggest trading lessons I ever learned, if not the biggest trading lesson I ever had, was to understand that my individual stock trades don't operate in a vacuum. They're really mostly moving in line with what the big major indexes are doing, like the S&P and the Dow and the Nasdaq. Understanding what those guys are doing gives you a clue as to why your individual trades are acting the way they are. Your individual stock trades are like ships on the ocean of the major market indexes, so you need to know the tide and current of the market to successfully navigate your way to trading profits. Are we in a bull market or a bear market? What will happen to your trades this week? Don't get caught out and don't miss out. To understand the charts you're about to see, get your free video course and manual, plus many other free bonuses at stockgossipfilter.com. Now let's begin the show. Welcome to another weekly market update. Before we look at the major index, the S&P and all the other good stuff we look at, just wanted to show you this. This is a chart of TGTX, and by subscribing you're going to get alerts to stocks like this. And so, I mean, this was a buy right here, and that's all on record on this channel, and it's on its way to tripling, being a triple profit now with more to come. So, you know, do subscribe. There's lots more here than just this weekly update, which in itself is very important, because as the market goes, so do your stocks. So here it is, S&P 500 after the market closed, 21st of April. Each of these up and down lines, in case you don't know, is the weekly price action of the S&P, and it's smoothed out for us by this. There's two lines here, but the main one I'm looking at here is the red line, which is the 40-week moving average. That's kind of a benchmark for, you know, how things are looking. And how things are looking it's after this long downtrend of 2022, as I've been commentating, that downtrend broke, pulling out slowly, and this is curling up nicely now, and we have a very healthy position. The price is above the 40-week, and the 40-week is pointing upwards. This should be, although I'm not completely calling it yet, the start of a brand new bull market. It still needs to prove itself using the systems I do. If I zoom in on the daily market, as I said last week, this is a fox market, which is a transitioning into what we don't know yet, and I'm sticking by that for now. It's still a fox market. Short term, last week I said it's kind of still bullish, but I warned you that, you know, it's still it's looking very stretched, and as it happened, the market really didn't go anywhere. It didn't go down or up. And this week I'm kind of thinking the same thing, although I'm more and more, this is a very stretched market. There's a lot of things going in its favor. But I wouldn't be surprised to see, you know, a healthy correction to the downside coming up here. You know, nothing goes up in straight lines. But having said that, I think this market could just hang in there for a bit longer, moving along. Everything else I'm looking at here is looking good. The Dow Jones and the Nasdaq backing it up. And this Russell, that could be doing a bit better, the smaller companies. The global economy wise, copper is always a good benchmark for that, and that is turning upwards as we see here. There's the moving average, and the price is above it, but we are getting stretched now. There's going to be a correction. Things that I look at, for one of the things I look at anyway, how are we doing in terms of a correction, is what's called the risk on or the risk off trade. When people are feeling bullish, they'll come out of the dollar, which is this chart, and as you can see here, it's, you know, it's looking ugly. The dollar's definitely heading down, which is a bullish sign, because when people rush to the dollar, that means they're frightened. In contrast to that, the euro, which is of course opposite to the dollar, everything is pegged against the dollar, but euro is a very good one to look at. And you can see, look how stretched this is. The euro is really pushed high and high and high, which is a bullish sign, but it needs to cool off. This is a long way from its moving average here, and at some point the dollar will go up and the euro will go down, but that's a healthy thing. No chart is going to go up ballistic like this. Well, unless it's some of the penny stocks I look at, then you should be subscribed to that. But just things like the euro and the markets, this is the stretch position. So I'm going to stick with the short-term bullish call, but, you know, with the strong caveat, more and more each week, we're going to get and should get a correction to the downside, which is a healthy thing. So I will speak to you next time. I appreciate you giving this video a like, and don't forget to subscribe, or you could miss an important market call. Next up, a free webinar, how to read stock charts and trade stocks, so you'll know what I'm looking at each week and why, as well as be able to trade your own stocks. I'll speak to you next week.